Friends, welcome. Let us start our analysis on 27th January. Till our last video, it was up to 24th January. Then the next week from Monday is 27th January. So what happened on 27th is this was the PDL, the previous day low, and the market opened gap down. So they're forming a gap border. Whenever this gap border is formed, we have to wait for either one of the gap to be broken. Now, in this case, you would surprise what is this level. This level, if you go on a daily time frame, you see 27th is this one, okay, and this is that level, this bottom. This is called swing low. You see all like the latest swing low is this one. The market never went to below this point till few times in a day. So what happened, we marked this was the swing low. This level, when it was broken by this candle, you see this was like back to back green candles. Still we could go long, but there is immediate resistance, and it is whenever the market open and goes in the same direction and breaks some important level, most likely it will fail because market tries to go for a confirmation instead of now this is broken, but either it has to go straight or then come back and take a retracement here and then go up. But in this case it does not happen, so more likely it will be a false breakout. So false breakout, you have to wait for a confirmation. This candle closed below this line, below the pivot, so this is a false breakout. You can go short here, short at this point. Short position, your stop loss will be above day's high, above this point. Twice the stop loss or day's low is your target. So this is your target and you should get out somewhere here. Yeah. Then after that, I don't see any other trade because even if this candle has broken the low of this candle, the first candle is not green candle. So this is not a green candle breakout or any other pattern. So I see only this pattern, and then the 20 EMA is not convincingly broken, like not only one candle is breaking it again, it came down again. So there was no trade unless this unless the candle breaks the 20 EMA convincingly and goes up, or day's high is broken, or this is broken, there is no breakout or more trade. So this is kind of reversal to sideways day. Not much in this, only one trade. So we cannot shift this level because this is again a small gap border form. So let us mark the new one. This is PDH, then this is PDL. Next day, yeah, this day the important level is this CPR, the CPR to be extended, and it is a virgin CPR. This will be virgin CPR. This is a gap border, and this is PDH, PDL, and in this let us see where the market opened on 28th of Jan. Market opened within this range. Whenever the market opens within the previous day range, you have to be patient. You have to um, wait for the correct entry unless the important level is broken. So you see this red candle. You should not immediately go short because there are two reasons. One is this immediate CPR on the way, and this is not breaking from any important level. The important level is PDH and PDL mainly for the previous day, unless there is a huge selling zone or something from this point. Although this point is a selling zone here, but you see immediately there is a CPR, so not good risk reward trade. So this is low probability. Then the tiny candles, and you see this candle has reversed. This is a exactly CPR reversal pattern. I'll tell you how it works. This you have to go long on this point, okay. The stop loss will be always below the CPR, okay, and then you know twice the stop loss is your target. So where is twice the stop loss? This is the stop loss. Exactly here. So this is how you should trade. Trade wisely, trade with a pattern, and trade with some logic. So this trade worked. Until this trade, your stop loss is it. You should be once you enter the trade, your either stop loss should hit or your target should hit. Here the target has hit, and this was a gap border. Once this candle breaks the gap border, then it is likely to go up, but you have immediate resistance here, the another gap border. Now this candles have broken this also, but it reversed again. But this 20 EMA again it goes up. Okay, and why market return from this point? Because this is a virgin CPR. One can take a short entry here, but for me it was a low probability, although it worked, because when you take the short entry here, your stop loss will be above this. So I would always prefer to take a short entry on virgin CPR reversal trade when the reversal happens on the upper part of the CPR here, so that the stop loss will be small. And moreover, this is the late afternoon candle. So late afternoon, um, most of the time virgin CPR doesn't work. Here it worked nicely. If somebody could have gone short, they got a good risk reward, uh, good profit, but it's for my setup it is a low probability. So once the first trade is you're out of the first trade, I don't see any other trade. If there would have been a proper bearish candle here, or the market would have reversed from this point, there was no trade. And if the market touched this point again, the CPR, the bottom of the day, it would have been a long entry if this candle would have been here, because it forms a W pattern. But it was very late afternoon, so it's a low probability. Now the gap is filled, so there is no gap border. We can remove these points. Now let us put, this was the PDL, yes, and this is PDH. Okay, PDH again can be treated as a selling zone, selling point here on top, and this was a buying point. So PDL and PDH both are important today. Now you see what happened in this case. Again market opened in no man's land. Whenever the market opens on some unimportant levels, it is no man's land. Like, you don't have to do anything unless it goes on a proper supply or demand zone. So market fell to the CPR, again reversed, and it is properly giving the false breakout from 20 EMA also. So you must go long here. Let us go long on this point. Stop loss below the CPR, then twice the stop loss is your target. So where is the target? Where is the target? Yeah, this is the target. Twice the stop loss, 1:2 risk reward, or the next resistance. In this case it is resistance, otherwise if you are taking the short trade it will be support. So next pivot, or next, like this PDH, it was this target also hit. Okay, then this trade also hit. There is no other trade on this. People will get panic, if you are holding your trade up to this point, and then again this big red candle has broken it. That's why I said, once you lock your stop loss and target, you should be in the trade until your stop loss hits or target hit. When people buy options, better to exit from the momentum, because once this is fallen, it will take long time to get the same premium, so you can be out on the same. But if you are buying future, it is the safe stop loss, safe target. That's it. Let's find another. So this PDL will shift here, this point, then your PDH will go this place. Okay, now CPR is kind of average or wide CPR. What happened on this day is, let us see. Okay, this was a virgin. Anyway, this with these candles, this CPR was penetrated, so this becomes no more virgin CPR, so there is no importance to this CPR now. Okay, what is the important thing here? First candle opened the red candle, it is from the PDH, but immediately there is CPR. Again same thing, look, first candle opened this with this red candle, it could not break the 20 MA, and exactly from 20 MA it reversed. So this is your entry. What is the entry? Long position from this candle. Okay, and stop loss is the first, like the top pivot of the CPR. So this is your stop loss, and then twice the stop loss is your target. So where is the target? Yeah, target is here, this one or this pivot. So once the target is achieved, you will see, you are missing the trend. It's a big repeat kind of. You must be out of your target once the target is achieved. Now this, with this one, the next entry will be where, how it behaves at the 20 MA, although it's not a trending day because first candle was red candle, so more likely it will come down. So what happened is, this is broken, then this candle has given a good this is here. Okay, this candle has given a proper signal for you can say a false breakout. uh, and why it did not work, there must be, yes, this is okay. So with my setup, this is the long entry. Let's follow long entry on this point. The stop loss will be below the pivot because you have this 20 MA then pivot, so no need to keep below this. This is a good stop loss, and twice the stop loss is your target. So somewhere here is your target, but you see this stop loss hit. So it happens, guys, stop loss will hit, but you have to just follow your stop loss and come out. If you don't take your stop loss here, considering it will go up, look how it came down. Now the next entry will be, first candle is red candle, market moved from this point to this point, again wait for this point to come down. So where is this point? This point is here. So if you see this point, yeah, this point is here, and from where exactly it took off. So you must enter on this point long at this candle or this candle. Okay, if you go this candle, and again the stop loss will be below the top pivot of the CPR, and twice the stop loss is your target. So somewhere here is your target. Yeah, this is your target. So out of 3 trades, 2 trades hit your target and 1 trade hit the stop loss. Okay, what is the next? Next is this PDL, PDH. Okay, another important level will be virgin CPR. So let's mark this. This is PDH. Yes or no? This will go somewhere here. Yes, this is your PDH, PDL, and virgin CPR. But virgin CPR market did not come there. Still, we will mark this virgin CPR for today. It will be this virgin CPR. Okay, what happened on this day? It's a narrow CPR, and market opened at the PDH. It did not break the PDH, and it's a doji candle. So even this candle has broken the PDH. Immediately there is pivot. So this candle has broken it. This candle, when it broke it, it's like a not a parabolic move, but uh, considering the narrow CPR is trending day. So first candle you cannot take the trade because there is immediately PDH. Unless the PDH is broken, no trade. PDH was broken like not convincingly here, then it's reversed, then again it is again. So this candle has broken the PDH and this pivot simultaneously. So on the trending day concept on this narrow CPR, you can go long, this candle you should go long. Here stop loss will be below the candle's low, and twice the stop loss is your target. Where is twice the stop loss is your target? Yeah, somewhere here is your target. So here the target hits. So your trade is done. Now what is the second trade? Where is the second trade? I say when there is a trading day, the next trade, if you miss any trade, you did not understand what type of pattern is following here, you should go long near the 20 EMA, not here, because 20 EMA should be above and support should be down the 20 EMA. So where is the next trade? Let us see here. Here is also not a great position, because 20 MA and then there should be some pivot or support below that 20 MA. So this is a low probability, although it worked, it's a low probability. Then where else? Yeah, this can be treated, but it's not exactly coming at the 20 MA. So if this candle would have been somewhere here, you can go long here, keep your stop loss below the pivot, twice the uh, stop loss is your target. So there was no trade here also, no reversal trade here, because there are two reasons. First of all, this is a narrow CPR, which means trending day, and second is it is almost late afternoon. So late afternoon, there on the narrow CPR day, if this would have been a proper breakout, like this red candle would have broken this 20 MA in the half, then it would have been a high probability, but not with this was not a convincing breakout. In fact, you can go long here on this, because this, it broke the 20 MA, then it reversed. So this is a false breakout. False breakout means you have to go long on the candle which is breaking the 20 MA. Here keep your stop loss below the candle, twice the stop loss is your target. So where is the twice the stop loss? Yeah, this is twice the stop loss, which yeah, achieved here on the last candle of the day. It's fine. So that's it. Let us see next day. Next day the low is here and the high will be, let me see where the high is. Yeah, this is high, I believe. Let me see. Yeah, that's the PDH and PDL. This is a white CPR today. White CPR is usually reversal or sideways day, but I think there was something on this day. Was it a budget? Yes, it was a budget. See, when there is an event, better avoid trading. Even if you are expert, avoid trading, because event day market will not follow any pattern, any technicals. It is just zigzag one. So my, like, I will try to apply the patterns, but I know it won't happen because it's a zigzag day on the, you will see, this is the red candle, then this reverse, take a trade here, stop loss, okay, that trade is achieved. Then there is a reverse pattern here, this one, you put a, you go short, take your stop loss, and this trade has achieved. But this is not the way to look at the market. Just because your patterns are happening, you should not put your hand in the fire. No trading on the event days, please remember, guys. I have seen lot of examples, I have experienced myself, that one can blow complete capital on such event days. So no trading day this for me. Even if your patterns are applying properly, no trading day here. That's it. We'll move forward. This is the low, this is the high. Yes, now this is extreme narrow candle, narrow CPR. So this is, usually it's a danger one, because anything can happen on such days, as I have been telling you. So this low, market opened exactly on the PDL, it went down, and one can go short, but you see the criteria is not meeting. Where is your 20 MA? 20 MA is too far, so no trade on this place. And then this reverse, the next candle has reverse, but no trade because there is immediate, this one is immediate PDL. Now this PDL will not be a resistance. Why? Because your resistance is here now, the first candle high. So let us move it here. Now what happened? Again it tried to break, but this candle reversed. So one can go short on this candle, keeping days high and days low, or most of the time strong support and resistance. So there is no harm in going short here, keeping your stop loss above this, and twice the stop loss is target. But this was a small target. Then what happened is, most part of the day it stayed sideways. This candle has broken the day's high, but it was parabolic. You see, 1, 2, 3. Although there are only 3 candles, but you see how much effort it has gone in breaking this 20 MA first, then this pivot, and this 3 resistances are broken. So you can consider, like, just compare it like a story. If a strong man is breaking lot of things, he will be tired till the time it reaches here. So, and if it is one candle from here, we can understand, but these are like 1, 2, 3, many candles. It's a momentum candle, they call it. So there is no long trade on this. Then what? Then there's rest part of the day, it's sideways, it's consolidating only. So no trade on this day also. So what is the next? Next is, this was PDL. This is PDL. Then this is PDH. PDH. Okay. And for you, this will be a, this point will be a we can say that's a supply zone, because market failed from this point. So supply zone, how will mark? It's not just a line, we have to mark it with this top of this day, from there to this point, solid point. Okay, let us start. So this was PDH. Then the market opened above PDH, and it was a red candle. First candle was red candle, too far from 20 MA, no trade on the first candle. Then somehow it went to this point and fell down. Why it fell down? Because of no reason. Okay, it fell down from this point just because there was a pivot, and then somehow it broke the low of the first candle. Low is broken by this candle, this big candle, and 1035 candle. And I have told you, if the 20 MA is broken or the low is broken, there is a possibility to go in the same direction, because, but not here today, because you see it's only small part of the candle is up and this big candle is down. So you have to wait for another confirmation. But instead of going down, this candle has given the false breakout. So you should go long on this candle. Go long on this candle. This candle, I mean to say. This candle. This is 11 AM candle, and your stop loss will be below the day's low, and this pivot, this is a strong stop loss, and twice the stop loss is your target. Where is twice the stop loss? Yes, twice the stop loss or this supply zone is your target. So you should be out here. Again, you look how beautifully market respected this level. It went up and then it could not break this here. Then again it retraced exactly. If you want to take a retracement trade, so once it goes up, comes back, and on a proper green candle you should go long. Where is proper green candle? Here. Although there is 20 MA, because this is late afternoon, it is a proper retracement, it will not respect this 20 MA now. It will go up, so you can go long here, long on this. You need a confirmation to go long. There should be a proper green candle, and then twice the stop loss is your target. So Yeah, here is your target. You should be out, or this one, this top, the swing high it is called. Actually, if you see, instead of going long here, you can wait for the next candle. If next candle is closing above the 20 MA, then you can go long. So basically your entry will be here on the next candle high, and then the stop loss is here, and then 1:2 risk reward. So somewhere here you should be out. Yes, that is how. Okay, so this is done. Then next is go this. Okay, again here now the gap border is formed. Gap border is formed on this one. We'll see that how it works. Then let us, okay, there is virgin CPR also, but I think next day market did not come down that much. Let us see that. This went here, this is top. Market opened above the PDH, but wide CPR is reversal or sideways day, is not much here, nothing to go long. This candle is giving proper green candle, but if you go long here, keep your stop loss. Look, this the high will be big resistance. So days high, first candle high, these are the big resistance. You should not go long here. It's not a good risk reward. So where is the next one? Next one is here, like it came down, and then since the CPR is too wide, you should not play. Like you will see, oh, this is broken, I'll go short here. Oh, this is given a false breakout, I will go long here. Then again it is broken, then again it is broken, again broken, again, so many times. And this 20 MA is irrelevant when there is a sideways market or too wide CPR. So remember this. So for me, there is no trade here on today. If somebody has to go long or short, it is only short, and that also where exactly on this candle, 945 candle, because first candle is proper red candle. Market went up and again fell down from the top. So going short here at this point, keep your stop loss on about days high and twice the stop loss, or CPR is your target. So that has happened, but this is only for the experienced guys, not to follow, because this is so confusing that it's breaking 20 MA. You should neglect the 20 MA on such days. That's it. This is PDH for the next day. Then you have PDL. PDL is here. Okay, this remains a partial virgin CPR. Okay, because only the last candle body has penetrated. So this is very, like, this is also a strong CPR. Now let's see here what happens. The next day opened at this point. Okay, then it exactly closed on the on the CPR, so there is no trade. But the second candle has closed below the CPR and below the 20 MA. Both strong supports it has broken, but still there is no trade because this full thing is virgin CPR. If you want me to see that, I will show you here. Okay, this is virgin CPR. So there is no trade on the second candle also, third candle. Then you have to find a trade which is virgin CPR reversal, and which is that, I think this candle, 10 AM candle. So you have to get long here, long on this point. Below the CPR is your stop loss. Stop loss is too big, and this is a low probability, but still I'm telling you, if you want to go long short, this is 1:2, 1:2. Yeah, 1:2, this one. Okay, so you see here the stop loss is hit. If you miss to take the entry here, you can take the next entry on this candle, or this candle. Here your stop loss will be small. That's why I always say, when you take the virgin CPR trade, you take on the next half, not on this first half. It should go, because your stop loss will be smaller in this case, and your stop loss will be hit by, say, this candle, and then there is no trade on the rest of the day. Okay, this is PDL now. This is PDH. Let us again see what happens. Okay, here first candle is breaking the CPR. It's breaking 20 EMA also, and it's a strong bearish sign, but no trade because your stop loss will be above CPR. Too big stop loss. Don't worry. In fact, if you want to take a trade, you can take on this green candle to take a long trade. Below the day's low will be your stop loss, but immediately there is CPR, so low probability trade. This is a trade from this point to this. This is actually this is called red candle reversal pattern. So any candle comes to the top of this one and then again reverses, gives you a red candle signal, you can go short. So on this candle 10-10 candle, you can go short here, keep your stop loss above the day's high and twice the stop loss, but this is a low probability because you see this candle 10-10 candle has got a half of the size of the body as a wicks, so it's not a proper bearish candle. So wait for proper bearish candle, market will give you time. Here it's like a initial balance, you can consider initial balance means first 1 hour of the market. Where is 10-15 candle? This is a 10-15 candle, so this becomes low, this becomes high of the candle. Now from this point, if market goes up to same high, you have to wait for the reversal trade. And where is the reversal trade? This candle or this candle or this candle. So you can go short here or here, back to back two red candles here. Keep your stop loss above the day's high and twice the stop loss or day's low will be your target. So in this case, you will say that there is a CPR, but look, I told you, when the first candle has broken it, then this candle has broken it again this candle has broken, now it is broken. So it is broken already 2-3 times. So this becomes a less powerful CPR. So what is your trade? You should go short on this candle, stop loss above the day's high and twice the stop loss is your target. Where is, yeah, twice the stop loss or day's low here somewhere. So the target is achieved on this day. So that's it guys, hope you have learned and try to practice, master on those patterns, just understand, don't get confused on each and every candle. Only trade when the candle is at a exact support or resistance or at a good place. So no need to trade on each candle. If you are too much into trading, you will find a trade in every candle. So this trading is always a part-time job. You don't have to focus each and every candle and every pattern. You will have only 1 or 2 trades in a day. So what you have to focus is, let the candle complete, let it be on your line like support or resistance or important indicators or whatever levels you have marked, then only trade. So that's it guys, hope you have happy and successful trading. Thank you, bye bye, take care.